Meta reported earnings and the stock is down over 12.5% on the day. I personally believe this is a massive overreaction for Meta. Stock earnings were not bad at all. They beat on EPS 471 versus 432. Revenues, they also did a slight beat on revenues. Pretty amazing stuff. But the market is freaking out again, mainly from an increase in CapEx spending. This is what CNBC said. They said the stock sell off accelerated early in earnings call after the CEO jumped into his discussion about investments, mainly areas in glasses, mixed reality, metaverse, and all these kind of things, where the company doesn't currently make money. And the market is just scared of an increase or an undisciplined capital expenditure cycle because they also increased again their capex for 2024 to 35 to 40 billion from 30 to 37 billion. It was like 20 billion last year, I think, or 22 billion. It increased 30 37. Now it's between 35 to 40. And the market is freaking out about it. This is one of the reasons why the stock declined so much early in 2023, I believe it was, or late 2022. And it was just absolutely crazy because the market was scared of another undisciplined capex cycle, something that doesn't make sense, something where Meta is burning tens of billions of dollars on areas they don't make a profit yet. They don't make any money on them and they keep losing money on them. And the market is scared of it. And I personally believe it's some kind of an overreaction because Meta can actually afford the capital expenditures that they are trying to do. And you also have the potential ban of TikTok. This could be something pretty magnificent for Meta's business model. None of those things I'm going to talk about today are going to include a TikTok ban, but the House and the Senate did pass it. The president will likely sign a bill very, very soon. And they have until January 19 of 2025 to divest TikTok. And if they don't do it by then, I think the president can extend it another 90 days. But for me personally, I don't believe, ByteDance is gonna sell the TikTok business to the United States. We saw what happened with other companies that had the same issue in China, and China did not let them do it, and they ended up just getting delisted, and they just got removed from the United States. And it's not as big as TikTok, of course, but I don't personally believe they're gonna sell TikTok. A lot of people would love to buy it in the United States, but I don't think they're going to do it. I think it will most likely be removed from the United States. And in this case, something like Meta could do amazingly well. Even dead money Snapchat could do something pretty amazing. But we'll see what happens. No one really knows what happens. But none of those things are including a TikTok ban. Net income did pull back a bit from Q4 of 2023, but Q1 for Meta has historically been a slower period for advertising, but it's still up a lot from Q1 of 2023, more than 100%. So pretty amazing numbers from Meta on net income. EPS also declined from Q4. Daily active people has been also rising, which is something that surprised me with Meta. I mean, it's crazy. Whenever a company gets to this size, normally the growth goes slower and slower and slower. But in the case of Meta, it has pretty sustainable growth in terms of family daily active people. So pretty good stuff from Meta. They do also pay a dividend. I'm gonna discuss it, but I'm not a big fan of the dividend. I would prefer buybacks and maybe try to do acquisitions, although it's very hard to do. But for Facebook, or now it's Meta, it's trading around 23.7 times earnings. Now the mean was 27 times earnings. It traded as low as 12 times earnings. Most of you know the story in late 2022. Now it's trading around 24 times earnings, which I personally believe 24 times earnings for net income margins of over 30% for a company that's still growing revenues around 15, 16, around 18% the guidance is for 2024. I personally believe this is a very fairly valued company on a PE ratio basis, but I tend to look more into the valuation model, which what I try to do in every single video, and it assumes just very conservative growth numbers for the next 5 years, and I put a fair multiple on it, and I try to determine the fair value of Meta. Now for 2024, and based on their second quarter guidance and the analyst guidance, the average revenue growth is around 18.5%. So I put in 18% for 2024. Now this is something where I disagree with the analyst. The analysts, they have 12.5% for 2025, 12% in 2026, and like 10% in 2027, which no one can predict 2027. But for me, I just don't see why the growth would decelerate to 12 and 11 or 10%. I think something around 14% sustained is more realistic with Meta because I just don't see how the growth can decline so much. There are so many areas of the business that are growing, so many things that could potentially turn profitable. So the average analyst estimate is around 12%. I used 14%, which I believe is a little bit more fair for something like Meta. I think it's very, very achievable, and especially if you count in buybacks with EPS and many different things. But net income margins, 33%. I kept it at 33%. PE ratio is around 23 times. I kept it at 23 times for 33% net income margins. And a company that's growing 18% and even 14%. I think 23 times earnings is very fair for a Meta. I put a 3% shareholder yield. It's around a 2.5% buybacks. They buy 2 or 2.5% of the company. And I also pay a tiny dividend. So I put it in at 3%. And I'm not a big fan of the dividend. I don't like it, but that's what they did. So in total, if we're buying Meta today at $434 or around $1.1 trillion market cap, we get about 101% on the upside over the next 5 years, or pretty close to 16% CAGR over the next 5 years, which is an amazing return. And this is one of the few companies that actually met my 15% plus CAGR, or almost a double over the next 5 years. Meta would meet it here. But I have to admit, if the growth does decelerate to like 8 or 7 or 10% or something crazy, if it does go down a lot, the PE ratio will likely go down either. So I would not be surprised if Meta maybe potentially trades around 20 times earnings 5 years from now, which is very possible. If a lot of their investments did not succeed and people lose faith in the CEO again, it could decline back to 20 times. Very possible. Now, if this happens, the upside would only be 77% or 13% CAGR from here. And in this case, we would have to buy Meta at $382 per share to get a double over the next 5 years. But for me personally, giving my honest opinion here, I think Meta stock is a buy. I think for the quality of the company, for the things that they're doing, for a lot of the AI investments, there's a lot of call options with Meta. The AI investments, a lot of different things they're trying to do, the potential ban of TikTok. And even if all these things don't happen, if Meta just pulls back on the 40 billion in CapEx spending and they do some buybacks with that stuff, I mean, the upside is just amazing on the stock. So I think Meta is a buy over here. And this is just my personal opinion. It's not financial advice. So thank you very much for watching this very short video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.